Kevin Brocious again. In this video, I'd like to continue my discussion about inflation and the appropriate inflation protecting investments for investors' portfolios. It's easy to see how inflation impacts your daily life. Gas prices are higher, groceries cost more, electric bills are higher, etc. But what inflation does to your investments isn't always as obvious. Let's say your money is earning 4% and inflation is running at 3%, its historical average. This means that your so-called real return, the stated return minus inflation, is only about 1%. And after you subtract taxes and other expenses, you could actually end up with a negative number. In a previous video, I talked about real estate investment trusts as a hedge against inflation. And I'd like to talk to you about another asset class that protects investors from inflation, and that is Treasury Inflation Protected Securities, or TIPS. TIPS are bonds issued by the U.S. Treasury. Like any other Treasury note or bond, TIPS are basically loans to the U.S. government. They receive interest payments based on a fixed interest rate specified in advance. However, instead of guaranteeing you how much you'll be paid in interest, an inflation-protected security guarantees that your real return will keep up with inflation. The interest rate stays fixed. What you won't know is the exact dollar amount of the payments you'll receive, because that fixed interest rate will be applied to an inflation-adjusted bond principal. And if inflation goes up, your return will increase to match it. So how do TIPS work? TIPS pay slightly lower interest rates than equivalent Treasury securities that don't adjust for inflation. That's because your TIPS principal is automatically adjusted to match any increases or decreases in the Consumer Price Index. The Consumer Price Index is a widely used measure of inflation. If the CPI, Consumer Price Index, increases, the Treasury recalculates your principal to reflect that increase. TIPS protect investors from increases in inflation by adjusting the principal amount of the bond for inflation. And since the fixed coupon rate on TIPS applies to the inflation-adjusted principal of the bonds, both the interest and the principal payments replicate changes in the CPI. Because of these characteristics, TIPS are one of the best inflation hedges for the investor. When TIPS principal adjusts for the Consumer Price Index, it creates a taxable event for the investor. This adjustment is known as phantom income. The investor will not receive an additional check from the government. However, the increase in the TIPS principal is considered income for tax purposes. For that reason, TIPS are best held in IRAs, 401ks, or other tax-deferred accounts. That way, this income won't be taxable until withdrawals are made from these accounts. Thanks for tuning in.